Welcome to The Real Money Show, the number 18778 Silver, the website, guildhallwealth.com. My name is Jeremy Wiseman. I'm joined by Jerry Correia, and it's time to insulate your portfolio. You need to protect your wealth right now. We've got lots of news coming out from the Bank of Canada and as well as the Federal Reserve. And what is that going to mean for your money? Everyone can see what's going on around them. You know, governments are trying to tax you to like crazy. Inflation's hitting. The debts, as we've always said, they don't matter till they matter. Well, they're starting to matter. Jerry, how was the week for you? The biggest news, obviously, price of the metals.
We've been anticipating this day. Here we go. Silver broke above $30, the $30 milestone per ounce. The first time in a decade, 2013. I mean, this is when my daughter was born. I remember that day it happened. It's up 9% this week. Silver is up also 29% year to date. Gold is on fire as well, breaking through the barrier of the $2,400 mark. Even platinum reports coming out this week on continued structural deficits. Metals are up, even base metals up across the board, mostly aided by China's stimulus measures. Today, they're looking poised to add some more stimulus to, according to Bart Milek, he's the TD Bank's commodity strategist. He mentioned that gold is moving higher despite this uptick in yields. So this is an anomaly. China's stimulus has helped, as we're also seeing the base metals doing very well. China announced this week that they're moving towards historic steps to stabilize the crisis-hit property sector and a major consumer of industrial and even bullion markets. So this is a very attractive time to be in precious metals all across the board, from the BRIC nations even now to North America. So it's a very exciting time. Congratulations to all those who got involved. But again, we're excited, but we haven't seen the rally yet, Jeremy. This is just the beginning.
Yeah, let me give you an example here. You know, we've had people who have been stacking over the last several years in precious metals. And, you know, it's always great to see the market back up above 30. Obviously, when it's a bit higher, you start to get people more interested in the market. The retail demand isn't quite where it was, let's say, the last time we saw the silver squeeze. However, this time it's a more sustained rally. A much more sustained rally. We've seen silver try to break 30 a couple times over the last several years. There was during the pandemic, March, right? Everyone wanted their toilet paper and their gold. They pushed the retail market, pushed silver above 30. There was the silver squeeze, which was on the back of GameStop, which is interesting the way that cycled back into the news again, and we'll talk a little bit about that later. But during the silver squeeze 1.0, they managed to push the price of the metals up above 30. Now, for those who haven't been engaged in what that meant, pushing silver above 30 at that time was very problematic for the powers that be. They talked about tamping down the price. They changed the prospectus on the ETF to say that they didn't have to have the physical. And then since that time, the COMEX has been drained of physical silver by the tune of 100 million ounces, which has all gone east, apparently. So that was very important. And then, of course, it also got driven above $30. Was it during the convoy, I think?
Yeah.
Was it during then? I think we touched a little bit above. I know it was 3 times over the last 5 years. The big difference is we've been consolidating this. We've always said the break above 30 this time is going to be sustained. It's going to mean a new bull market. And obviously it's come on the back of the metals moving up over 25% this year alone. Mm-hmm. Mm-hmm. Absolutely huge. Have you missed it? No. You know, I had a client buy today. The last time they bought was 2 years ago. Okay. All-in cost for them was about $30 at the time. That meant that the spot price at the time was around $27.
Right.
So we're up less than $5 on that. Right? Have you missed it? No, you haven't missed it. Analysts are calling for silver to go to triple digits. And that's very easy to see when you see that gold is trading. Also, let's give it its due, over $2,400. And yes, you're going to keep hearing all-time high, all-time high. They're going to say that in a disparaging way. Oh, it's at an all-time high. You don't want it because it's at an all-time high, do you? Right?
This non-yielding asset, yeah.
It's great when the stock market hits all-time highs. They don't say, well, now you should probably be conservative about it. But when gold hits all-time highs, it's going to be, well, you should be careful here. Mm-hmm. No. There's a reason why it's going up, and you have two major reasons why it's rising. And as you pointed out earlier, it's got nothing to do with yields.
No, not at all.
It's got to do with, one, protecting your wealth and your assets against declining currencies. There is a currency war. Everyone's racing to the bottom, and at the time when their debts are going through the roof.
That's right.
So you've got inflation happening, and it's not your wealth is not going as far. You've got to protect your wealth. But on the other side, it's where this is all headed, which is my main point here, is that there will be restructuring, there will be a new financial system, and most importantly, when you see all these central banks buying gold, you know it's going to be remonetized, and that seems to be the theme amongst all the analysts these days.
Yeah, we've been talking about that for quite a long time, with Basel III rules changing, prospectuses being changed, and we talked briefly about the GameStop, and that's a huge one for me, because this was the squeeze that began. It was infuriating the masses of us people, we the people who are seeing these Wall Street bankers bullying and shorting AMC. You had Bed Bath & Beyond, GameStop. These companies, their balance sheets and their overall, like, really, who goes to the movies? I know I go to GameStop once in a while to buy a video game here and there, but the structuring and the fundamentals behind these companies, not very strong. But to see that banks are shorting them, which is a bet that they're going to fail, we're grouping together, like, guys, let's go buy these things. Let's go buy these assets. So yeah, it's our heroes getting to work. We want to stop the corruption. But what we saw this week, and Octavio Costa from Crescat Capital put it really well when he said a stock surges over 100% because of the return of Roaring Kitty. We are currently living in one of the most speculative environments in history. This is where we're at. But over the course of the week, we saw that the banks, what they were doing, they were halting. They hit the circuits. They shut down the panel.
Oh, they used the tools that they had at their disposal.
They halted the purchases 38 times across these banks, and infuriating us. How can they do this? Well, guess what? You cannot halt the buying of physical ounces that are not digital. They can do that with your digital money in the bank, with ones and zeros and binary code, because that's what your money is. And if you really want to do something about the corruption on Wall Street and the corruption in the financial system, you're going to be squeezing the silver market. That's my message to Roaring Kitty. If you're listening to the Real Money Show, because why? The banks and Wall Streets are short 3 years worth of silver mining. They're shorting the silver market, the most short commodity market in the world. So if you want to make a difference, join us. The silver squeeze is on. We're witnessing history right before our eyes.
Now, there's 3 exchanges. There's the LME in London, there's the COMEX, and there's Shanghai. COMEX in New York and Shanghai. Crimex. But apparently this week in copper, there was a short squeeze on the COMEX, but not in the other markets. And you have to see these other commodities as examples of what's going to be coming forward. We've seen it in nickel. Now we've seen it in copper. We just saw it again in GameStop. This is something Ted Butler has talked about for years, the short squeeze in silver. Do you think it's going to actually occur? Do you think it's going to blow up in their face and we have a massive, just crazy run up in silver because of a short squeeze, or do you see other things at play driving the price?
We are in the ecosystem of demand with stagflation happening. You always say the debts don't matter until they do. And these paper shorts are liabilities that the banks must cover if there is a massive delivery. And this is what's happening. We are in the ecosystem of deliveries. There's massive delivery months coming up. We are in one right now. And this can only mean that this is going to trickle into the silver market, because the hashtag of silver squeeze is alarming people. It's waking people up now that it's over 30 and it's sliced through $30. The short squeeze is real, and this is what's happening with when you don't have the physical supply. You're gonna have to cover, and we're actually witnessing the COMEX 589 rule, where what's going on with Trafigura and IXM, according to Reuters, they're caught in a COMEX copper short squeeze. Copper now is roughly over 11,000 per metric ton. That hit a record peak, a gain of over 28% so far this year. We follow Dr. Copper because it is an indicator where we're headed. Now we have China adding stimulus to the overall metals market. This isn't all the kitchen. I mean, the entire kitchen's full of silver chefs right now. We're cooking up a massive storm, and it's only going to go one way. You want to join us in this fight.
And let us show you how to do it, because at Guildhall, we only deal in physical precious metals. A lot of people will say, if you can't hold it, you don't own it. We agree. Some people will say, if you can't hold it in your hand, go buy it, hold it in your hand. With Guildhall, that's exactly what you can do, but you can also have it in a vault facility where it's fully allocated, fully segregated. You can go to the vault and personally audit your holdings, which means you can hold it in your hand. Same thing with registered accounts. You can hold physical gold, physical silver, held in a vault facility outside the banking system, fully insured, backed by Lloyd's of London, but still within a registered account that's also insured, not from Canadian Insurance Deposit Corporation, but by the, sorry, what are you laughing at, Jerry?
CPIF?
Yeah, but the Canadian Insurance Protection Fund, which means you're insured up to $1 million on those accounts. So very safe, very secure, IROC approved facility, IROC approved custodian. You own the physical precious metal. The number 18778 silver. The website guildhallwealth.com. You had a last little comment there?
Yeah, so regarding the commodity traders, Trafigura and IXM, why they're important, they're actually looking to cover, so they have to go out and buy the physical copper from the market. So this is what's going to happen to the silver market, which is the COMEX Rule 589. They have to turn around to the public to ask for the physical silver back to cover their shorts. So this is going to be a very exciting. This is the time to be alive in the metal markets.
It's an exciting time in the market, and there's so much more talking about the Fed and the Bank of Canada taxing your metal. Could that become a thing? The number again, 18778 silver, the website guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 18778 silver and the website guildhallwealth.com. It is a very important time to protect your wealth. Make sure that you're defended against inflation, defended against banking systems, the fragility of the banking system, and gold and silver certainly insulate you. And it's been great to see that insurance policy, Jerry, has come to fruition, that they're doing very, very well this year. Although I'm just going to remind everyone again, I'm like exactly a broken record on this, which is gold over the last 20 years has only had 3 down years. So let's not pretend like this is a new thing for gold. Moving up above 10% in a year happens probably, I'd say, if I'm not mistaken, it happens about two out of every 5 years. So this isn't completely out of the norm, but this is definitely a run. And part of the run is also supply chain issues. And that leads around the world. We're seeing supply chain issues again. Middle East, there's a lot happening in the Middle East. Straits of Hormuz. Geopolitically, this is a very, very difficult time.
The Slovakia president.
And things are layering up. You're seeing a layering of all of these issues coming together. Geopolitical, debts, inflation, all of these things can come together, and we're seeing it here at home in Canada as well. So let's talk about the Bank of Canada. But first, I think you wanted to talk about mortgages.
Well, this is just, we're going to kind of segue towards the Bank of Canada and the Canadian economy right now. We wanted to talk a little bit about this was last week's show. The Toronto mortgage delinquency rate surges 71% higher, according to Better Dwelling. The share of delinquent mortgages nearly doubled in Toronto, and Toronto mortgage delinquency rates are on the rise. This is continuing. Affordability, Jeremy, is just squeezing Canadians. It's squeezing humanity right now across, I think globally, we're seeing inflation across the board. Look at the yen, the costs. It's just it's unaffordable. It's unsustainable. And with regards to that, Canadians are now waking up to understand that the purchasing power of their loonie is just continuing to be devalued and destroyed. The policies that the Bank of Canada has employed due to 2020 COVID, the amount of money printing. We printed 4 times the size of the Canadian economy, the GDP, in 2020, all at once for the sake of helping out the middle class, helping out the corporations, but they're clawing back. If you got CERB, well, guess what? You got to pay that back. Canadians are at their wits' end, I believe, Jeremy. And the Canadian the press, they were talking to be warned. They're actually warning the Canadian investor. Financial Post wrote this week that the declining Canadian economy, that the Canadian dollar as well, mean investors should add protection to their portfolio. And we just need to remind, as the mainstream is now talking about protecting your portfolio, what is in there? What is in your portfolio that will protect during stagflation? Ask. For thousands of years, gold and silver have provided a reliable way to secure wealth. A direct physical allocation in physical precious metals provides an unencumbered investment with 1, no counterparty risk, 2, sufficient liquidity for larger investors, and number 3, no dependence on management for performance. This is the reason why we talk, hand over fist. Protect your wealth. Protect your wealth. Protect your family.
Ad nauseum.
That's correct. Exactly.
But you should be buying the metal hand over fist.
Hand over fist. So, Bank of Canada also spoke. We had our Bank of Canada governor come out this week, and the headline: the Bank of Canada, brace yourself for a financial crash. Some indicators of financial stress have risen, says the Bank of Canada governor. At the time, the valuations of some financial assets appear to have become stretched. This could increase the risk of a sharp correction that could generate system-wide stress. The recent rise in the use of leverage in non-bank financial institutions could amplify the effects of such a correction. Jeremy, it just reminds me, this word stretched. Weeks ago, I talked about the U.S. Federal Reserve, the central bank of the U.S., their stability report that came out, and they showed a term called runnable money talk, runnable money risk. Their money could run away. And now the Bank of Canada is saying that the asset valuations in Canada appear stretched. We are literally watching the financial circus Olympics here. The Federal Reserve, the Bank of Canada, they're using these words and terminology to gaslight the individuals. All we have to do is get out of the banking system, get out of fiat paper currencies and into tangible hard assets. Jeremy, your thoughts?
Well, I think that while you're talking about these things, I just kind of think that the debts are punitive, the taxes are punitive. They've spent all of this money. They spent it without permission. They don't need our taxes. They're printing way more money, or deficit spending way more money, giving money away that they never asked for anyway. So it's not like they needed it from us. So when they're taxing us and creating that inflation, they're doing it just to punish us, just to put us in our place. Mm-hmm. And that's why you have these movements with Bitcoin and physical metals of people just saying, I am going to get out of the system. And what's wrong with that? What's wrong with making sure that you put the bankers and the government back in its place? Right? Saying, listen, you have to have discipline. And it's been interesting to see as a segue here of what we're seeing in the United States with regard to gold and silver, because you're seeing more and more states take the taxes off precious metals. You're seeing more and more states move against CBDCs and denounce CBDCs. Now you have even putting forth bills to get rid of the Fed, which is interesting because, I know Danielle DiMartino Booth and many others would talk about just, hey, let's pull them back a little bit. We laugh here because we say they want their independence, but they call themselves a Federal Reserve to make sure that people think that they're not independent. So, there's always this cloaking going on. Who really works for them? Is there any benefit to us? Well, look, Before the Federal Reserve, there was no income tax. But if you're going to borrow money from the Federal Reserve and you have to pay it back with interest, that is where are you going to get that from other than taxing people?
Right.
Whereas the Bank of Canada could lend people money right now and you don't have to pay interest on it. You don't have to. I mean, that's how they built the highways. It's how they built the schools. It's how they built the hospitals. All of this pretty much stopped in the mid-'70s. I'll give you one guess which prime minister it stopped under, right? And when did things start to change? So let's talk about this bill being put forth by the Federal Reserve.
Yeah, and
or not put it forth by the Federal Reserve, but about them.
Yes, it was introduced by Representative Thomas Massey. In a groundbreaking move, the Federal Reserve Board Abolition Act aims to dismantle the Federal Reserve System, shaking up the financial world. It was introduced by Mr. Massey. It's calling for a complete abolition of the Board of Governors and all Federal Reserve banks within a year. This is what he wrote. Americans are suffering under crippling inflation, and the Federal Reserve is to blame. During COVID, the Fed created trillions of dollars out of thin air and loaned it to the Treasury Department to enable unprecedented deficit spending. By monetizing the debt, the Federal Reserve devalued the dollar and enabled free money policies that caused the high inflation we see today. Monetizing debt is a closely coordinated effort between the White House, the Fed, Treasury Department, Congress, big banks, and Wall Street. Through this process, retirees see their savings evaporate due to the actions of a central bank pursuing inflationary policies that benefit the wealthy and connected. If we really want to reduce inflation, the most effective policy is to end the Federal Reserve. Powerful statement.
And you know, they're put in place through the approval of Congress, which means click your heels 3 times and Congress could disapprove it as well, which this bill is putting that forth.
Correct.
This is a milestone in terms of putting forth some bills. I know this probably has no teeth, but the fact that it's being put forth, the fact that it's getting put into the public conscience, says a lot about where we have come from in terms of understanding what the Federal Reserve really is.
Yeah.
And the wake up that's occurring.
Yes,
right?
exactly.
The amount of people waking up and understanding how money works.
Slow and steady.
So this is fantastic. You know, you mentioned the Treasury. Well, it's a Treasury run by Janet Yellen, right? So we've got to remember where things are. She has been pretty much completely anti-American, in my opinion, in terms of her pursuits and the way she's continued to spend money against the Federal Reserve. And Jerome Powell, it's hard to tell which side he's on. Honestly, there's people who think he's kind of a good guy, and there's people who think that the American banking system and the Federal Reserve banking system is trying to fight European agents and their banking system, and so the enemy of my enemy is my friend in a way. But Jerome Powell recently, I guess, got sick and can't attend speeches.
A speech coming up. I think May the 19th. He's got a speech in Georgetown, but he came down with COVID, tested positive. So, Jay Powell, you know, we wish you all the best.
Have you seen this thing? There's this. I've seen it a little bit. It was on Telegram. Someone would point out every time a politician or a banker got COVID. Mm-hmm. Like, it was always very, interesting, this person just got it. And it was always at very interesting times, basically thinking that they've been, I don't know, captured or
he's
taken in for questioning or custody or something. So it's like, come on. At this stage, we're still claiming someone's catching it. I mean, it's crazy.
The timing is crazy, but he will show up. Although it's going to be a pre-recorded Jay Powell speech.
Right. So pre-recorded, not live. Where is he?
I don't know. In the basement. We'll find out what policies are going to come next.
What basement is this?
From Jay Powell. You know what? Nothing can. We were talking last week about the different black swans and different events that are just supporting people making a move outside of such a controlled financial system, controlled governments, and outside of the banking system is key. This is your first step of doing it.
Hey, listen, you know, we're talking, we just mentioned COVID and stuff. Look how far we've come in terms of our battle against the Great Reset. They are not winning that that narrative war of the Great Reset anymore. When you've got congressmen putting forth bills to literally end the Fed, and you've got other bills being put forth to get rid of taxes on precious metals, and we're looking at essentially what's amounting to a remonetization of metals, and people pursuing cryptocurrency as a way to say, an FU to the banking system and the fiat system. I've got to say that I don't think the Great Reset had any legs. We know that the Davos crew is not very popular these days. We don't even know where Klaus is.
No
one's heard of him. Maybe he's got COVID with Jerome.
Together, yeah.
The number 18778-SILVER. The website guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 18778-SILVER and the website guildhallwealth.com. Physical gold, physical silver, both metals are doing quite well this year. It is very, very early on. We've had a lot of projections over the years and over the last few months. Most gold analysts are looking for gold to comfortably double from here, get into the 6,000, 7,000 range. There's others who look for very large gains like 27,000 an ounce, which, look, that's if you go back to a 1-to-1 Dow gold ratio and the Dow comes off from whatever 39,000 give or take down to 27, you could get that 1-to-1 ratio, and you could get it to 27,000. I think that there's within our camps, Jerry, there's people who are looking for sort of complete destruction of central banks and the kind of chaos that could occur in that, under which circumstance you would see precious metals go to those crazy numbers. You would see gold go to 27,000. You would see silver go to $3,000 an ounce in that occasion. And hey, listen, the numbers on that would be extraordinary. If you start with the premise of, if the dollar's worthless, then gold is priceless, then you could find where you are on the scale of $27,000 gold, because that tells you where the value of the dollar is. If they can hang on and go through this reset process, not the Great Reset, but a remonetizing of gold, a rejigging of the world financial system that is more equitable to everyone, where they're going to need gold. I think, we could talk about it a lot, but all you have to do is just look at central banks. And if they're buying physical gold, he who owns the gold makes the rules. They're setting up to have a seat at the table to be able to talk on that and be able to create that equality across the globe. So, a Bretton Woods, 2.0, it's so cliche.
It is.
But a new version of Bretton Woods, maybe one that doesn't peg gold the way the last one did. I think that was the big mistake.
That was the mistake.
From our expertise, and we've only been doing this for 15 years.
Well, who are we?
Who are we? So these are the two camps. There's, I guess, kind of a conservative look on where the metals can go, and then there's the, absolute destruction look and view, and maybe it's somewhere in between. I do think that if you just continue following the progression of the debts, paying off the debts or defaulting on debts, or you see these central banks, and we've heard it from the Central Bank of Holland. Or the Netherlands, that they have on their books a revaluing column. All they have to do is revalue gold. And if you go back to the gold standard, you go, okay, Nixon could have revalued gold. He could have said, okay, it's $35 an ounce. We're going to revalue it to $350 right now, and we're going to pay off the debts with a lot less gold.
Mm-hmm. That's right.
That's how you do it. And that could happen again. And so where is the level of where it goes? Certainly $2,500 an ounce isn't going to cut it. It's going to have to be significantly higher without the system collapsing. And so there's a balance there to be struck. Just, I suppose you could say, just sort of like interest rates. There's a level at which, you're going to kill the patient, right? So you can't go to 20% like you could in 1980, but you could hold them at 5% for 2 years. Mm-hmm. People will feel the pain. But we could hold them at that and talk as much as we can and bluster. So that's kind of where we're looking at in terms of prices. Where are they headed?
Yeah.
And if gold can go to $6,000, $7,000 an ounce over the next few years, which means it's basically tripling from here, where's silver going?
Well, the $27,000 mark was Jim Rickard sort of revising his cycle. We talked weeks and weeks about the third gold cycle. Each cycle previous has been about a 10-year cycle. We have about 2 years to go at the end of the third cycle. It could go, he was mentioning, up to 15,000. That would put silver at a 20-to-1 around 600 per ounce. Now he's up to 27,000. The reasons are beyond the revaluation. The revaluation idea and repegging potentially is central bank driven. It's the treasury driving that. Even with just looking at demand, when we have the move of 60-40 portfolios looking for haven alternatives, understanding that Canadians own less than 1% of gold, less than 1% of all Canadians own gold. We are so uninvolved in the gold and silver market. If just 1% of all of that money sloshing around in the derivatives market and the stock market, these overvalued markets, we're talking about overvaluation. People don't want to roll the dice with their wealth anymore. They don't want to take risks. We've already been through a decade of gaslighting, through risks, of fear mongering. You know, the toilet paper you talked about. We ran for toilet paper. This is where we're at, and people want they want solace, they want peace of mind, and just 1% will eliminate all of the gold and silver. And we're talking about structural deficits.
You mean 1% retail investment?
Yes, coming into the market, into physical precious metals. That's Exter's pyramid. Look at that. That's money driving into this finite silver and gold market. So this is just looking at it from a technical and a fundamental standpoint, even just putting the revaluation aside. Looking at the system really soberly right now, there's too many risks. There's too many events that are going to lead the third gold cycle, silver cycle up to historic levels.
So in some ways, you're saying if someone's looking at the market right now, oh, whoop-de-doo, it's up 28%. We're staring unobtainium in the face.
Yes.
There's going to come a point where you're not going to be able to get it.
You can't participate.
Even this week, I got to tell you, we're very generous here. We'll book orders, say, yeah, okay, we'll book an order for you, pay me next week, that kind of thing. Clients, we're always helping clients out as much as we can. But when the market's moving the way it is right now, all bets are off. You can't. And imagine if the market's moving faster than it has in this past week alone. And it's so funny because this market could go dark next week, right? Price could fall to $29 an ounce, and it would just suck the air out of the room. And by Wednesday, you'd have some people looking to sell. Right, it's a wild market, but at the end of the day, look, $30 silver right now is going to be the floor. It's not guaranteed this week per se, but $30 is going to be the floor, just the way $20 was the floor several months ago.
Right,
and it's going to continue on from there. And if you haven't purchased physical precious metals, we always recommend starting small, crawl, walk, run. That comfort breeds confidence, and it's just important to get your feet wet, get a sense of how this works, and we're here to help you step by step with that purchase. The number 18778 silver, the website guildhallwealth.com. More to come on The Real Money Show on 640 Toronto. Welcome back to The Real Money Show. The number 18778 silver and the website guildhallwealth.com. If you've missed an episode, check us out on YouTube. And please follow us on X. We've got some great stuff going out on X as well as Instagram. So, catch up on what's going on in the silver and gold market throughout the week. And if you are listening on YouTube right now, you can hit a like. It's not going to hurt you, but it'll help us. So why not? Jerry, something else that's been happening is we had a jewelry auction this week. And Lawrence Graff was back in the fold. He picked up a red diamond, a 1.56 carat Argyle Phoenix, and he bought it for $4.2 million. And also a 6.21 carat pink sold for $12 million. The colored diamond market is alive and well. The synthetic diamond is disrupting the market. Hey, change is going to happen. But when it comes to natural fancy colored diamonds, they're so incredibly rare. They're so incredibly beautiful. And they've been a means to store wealth. And the best part is they've never gone down in value. There's literally no volatility in that market. And I believe that's because there's no borrowing in that market. You buy it outright. So Lawrence Graff didn't borrow any money. I mean, he's a billionaire. He doesn't need to borrow $4 million.
Not at all.
Buy it outright. Never have to sell under duress, and you always sell on your terms. And I think for those reasons, the diamond market has never seen. I mean, the yellow diamond market a little bit in 2008. Okay, fine, but I don't think that the diamond dealers were selling their 1 carat Vivid IFs.
No.
So, sorry, you were going to say something.
Back to the back of the safe, those diamonds go. This is about rounding out your portfolio with a quality, rare, hard asset. Like a natural fancy colored diamond, rarity is key. When we talk about currencies just being printed out of thin air, this is an asset that will offset those risks. And by adding and keeping a natural fancy colored diamond in your portfolio is the way to go. Last week, we brought up a diamond at that Sotheby's Geneva auction. It was the 101 carat yellow that was supposed to go to auction. The last minute.
Oh, the 100 carat.
The 101 carat stone. The owner decided to pull it from the auction, did not want to auction it off. So it's something that you think, right? What is going through the person's mind? Why would you want to pull something? Well, you would lose a piece of history. You will lose the beauty of of what it's doing for your portfolio. And how are you going to replace it? And with such a large stone like that, such a special stone, it's just like a home. And you sell that, you're now sitting in a leaky boat of a currency. You're now fallen back into paper fiat.
You're naked.
You're totally naked. And this is one of those reasons you want to hold these assets. This is generational wealth for the long term. Yes, we help clients. We will help you when that time is right, to ladder out if you had to. But the market is firm. It's firming up. We're totally confident in this market. And Guildhall, we're happy to help. If you are interested in thinking of adding a natural fancy color diamond in your portfolio, you want to get in touch, request your diamond discovery session. Discover how we've been doing it. We've been doing this since 2008, I believe, Jeremy, before my time of being here. I was questioning at first. Show me. I'm a metals guy. Show me what it's all about in diamonds. And you guys have helped me understand how this has generated wealth for our clients, and I've been loving it since. Yeah,
check out the website at guildhallwealth.com, see some of the products that are out there, and just get a feel for it. You'll start to fall in love with these diamonds, and we do have lots of collectors as a result, because we've only gone out and acquired the most beautiful, the most rare assets, so we're not selling anybody else's goods. We've always only sold our own that we've gone out and purchased, so we stand behind that product. Let's talk about Javier Milei, friend or foe? Some people think he's turned around. He's a wolf in sheep's clothing.
We don't know, right?
What's been going on with him?
Well, he rose to prominence, became Argentina's president. He's by criticizing the established elite, advocating for economic reform, closing central bank, videos even showing him running around the streets with a chainsaw, talking about destroying the government bodies, and even dressing up as a superhero. He just became this superhero for most people, for freedom, for liberties. He was the antithesis of all the previous politicians in Argentina. The same Milei, though, is also engaged in talks with Larry Fink of BlackRock about investment prospects in Argentina, opening up. So
that's not so bad.
And he's...
That's not a bad thing, though.
Well, it's, we have to be mindful of birds of a feather, they flock together. We don't know what their ambitions are, but we do know that when you're partnering with these globalists, we have to be very, very careful. And we have to look at who who he's in company with.
Like who else?
There's Milei already appointed former JP Morgan executives to his administration. One of Milei's advisors, Dario Epstein, who has close ties to BlackRock, further blurring the lines between Milei's purported stance and his actual affiliations. Even his introduction to the World Economic Forum with Klaus Schwab saying, "We have a very extraordinary person among us today," he says, "and of course we are all eager to listen." And again, a very cordial welcome to the World Economic Forum was Klaus Schwab. His speech was widely covered. We watched it. And despite the criticism of the WEF establishment, Milei's address was welcomed by the crowd of the World Economic Forum. In fact, he was personally walked in by Klaus Schwab. So these are things, you start to pique my interest. I'm going to be keeping an eye on you, especially when you start using the same verbiage as the gold community, when we talk about freedom and this narrative. So we got to keep an eye. We know that there are many wolves in sheep's clothing, Jeremy, out there.
Okay.
So
we'll
it's
keep
up for discussion.
We'll keep an eye on our pal Milei in Argentina and see if he's maybe he's been turned over or something like that. We'll see if he's still looking to free the Argentinians and get their economy back on track. But if you want to get your personal portfolio back on track, we recommend taking a look at gold and silver. They're assets. They're basically not investments. You want to make sure that you stay within the asset acquisition side of things. So buying it outright, holding it in a vault. You can hold it in a registered account. We're happy to show you how to do that. The number is 18778-SILVER and the website guildhallwealth.com. Obviously, both gold and silver have a proven track record. We've seen great moves over the last few months, and specifically this week. It's been absolutely amazing. But the best is yet to come. So give us a call. We'll show you how to get precious metals in your portfolio, and we can't wait to speak to you and get to know you better. Wow, as we're finishing the show, silver just broke $31. It's absolutely amazing. The number, 18778-SILVER, the website, guildhallwealth.com. Thank you for everyone joining us this week. Thank you, Jerry. We can't wait to speak to you next week here on The Real Money Show on 640 Toronto.